Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Ira Epstein with your financial market wrap-up for this Friday, and this is the 13th of July, 2018. The markets are all now closed. This S's after the prices means that everything is settled. So this is where you're at. It was a pretty good day for the stock market. It wasn't a high volume day. We were sitting here talking about it. I was on the floor today doing some Bloomberg shows, and to make a long story short, as we were looking at everything, I was amazed at how many people had left early and just not a lot going on. Metal markets, there's nothing going for them. In a nutshell, they don't have an earnings report, which is carrying parts of the stock market right now. They're facing higher interest rates, fighting with the gold market. They're fighting with tariffs, where the stock market doesn't seem to worry about it just yet. But commodity prices are in the toilet. You'll see where the soybeans are down again today sharply. You had one of the biggest breaks we've had recently, almost a 6.5%, 7% break in crude one day as the markets get worried about more supply. What does this all mean if the trade wars get out of hand? Blah, blah. The reality of the situation is the world's okay. These trade wars still may not come to be to go for further tit for tats. Everybody at some point later in this summer is probably going to start talking to each other, and events will happen. We don't even know if the tariffs are going to go on European autos. Maybe they'll come off ours. Whatever the first domino is, the events are likely over the next 7 weeks or so to go in favor of not going for a further tit for tat. If you do, and the $200 billion in tariffs go on, it's all hands off. I was on Bloomberg today saying, you kick this thing up past September or so, you got to be very nervous here. August 30th is the last date for those $200 billion, and I would expect there's some movement before that happens. So we'll see what happens. In looking at the area charts of closes for the monthly, you still haven't been back to the 18-month moving average since 2016. Quite a feat. When you look at the weekly area chart of just closes, I put on the high and the low for you so you get a feel as to where you're at. You're back up to 280320. I had the Fibonacci numbers up last week, but they're not in play right now because what you've done so far is you've gone from the high to the low. You got up to a 62% correction, fell back right here, and now you're through that. We have to see what the market's going to do next. When you look at the weekly bar, and I wanted you to see just the high and the low, remember the others, the closes for just that, you can almost see the thrust down and how the market each time, like a ladder, is able to absorb that and then climb its way to another high. When I put the swing line on, and that's what this does for you, it connects the current day's action to the previous in a very specific manner. And what it creates is a line that I'm looking to see, is it creating a trend defined as in an uptrend, higher lows, higher highs. It's going on. Even this high just cracked out another high over that one. I look to see often where the market's fighting a battle or a neutral point. I think on charts, an 18-week moving average of close on the weekly chart is the number, it's the line in the sand. When a market's under it, it often tries to get back up to it and see if it can go anywhere from that. If it gets over it, sometimes it'll come back to it looking for what? Support to see if it can do something else. Bollinger Bands are also in play. Now what Bollinger Bands are, and that's these black dashed lines, they're an algorithm designed to keep the market within them 95% of the time. So what you're always looking at is, are they in a trend of any type or are they going sideways? Sideways markets often lead to choppiness back and forth as the market eventually is looking to break out. To break out, you generally have a bit narrower bands than you have right here. So while the market broke down and hit the lower band, I will be just as surprised for it to hit the upper band and be able to carry through rather sharply. I think that would happen if the trade wars ended right away, but barring that, I think the market can just be choppy. Are we in a trend? Absolutely. You're in an uptrend. The bias is up because you're over the 18-day average. The momentum is measured by the slow stochastic is up. And the next target, if it wants to go for the Bollinger Band, is the 2827 level. In the NASDAQ, an all-time high, right? Take a look at today's high. So we're sitting here with all-time highs, tech stocks are on fire, and you've still got the pattern of higher lows, higher highs, and you have earnings. So we're all going to be looking at all these earnings coming out. Today were the bank stocks coming out. They weren't overly hot, by the way. Wells Fargo didn't do that great. Citi, there were some areas there that could have been better, but they weren't enough to stop the market either. The Dow is caught in no man's land. It is not trending. This is what I mean when you see the Bollinger Bands and they start narrowing in and going sideways. From there comes a trend. And the reason is just like you own a pipe. Think of these numbers, the black lines of pipe, and you put a spring in and you start winding it up. You're looking for it to burst out of that end at some point, not through the pipe, but one way or the other, spritz out, shake up. We all did it as kids, our beers, right? And you have your finger out, you let it go. Well, who's getting hit where? That's one of the things. Is the trend going to break out to the up or downside? Momentum is up. There is no trend according to the swing line. You have a higher high, lower low, and you keep coming on. Remember, this is a weekly chart. You keep coming to that 18-week average going nowhere. The Russell is suddenly, I don't want to say it's out of favor. It lost its pizzazz. The market is backed off. It was the leader all the way up. And then all of a sudden, it's just sort of drifting right here. That could be just the makeup of what it is. It could be that the market's not as concerned in not driving up more domestic type companies than international conglomerates. Don't know. But you can see that on the chart, but still in an uptrend. In the VIX, the weekly VIX that is, you have the higher high, lower low pattern. Going nowhere right there. And you're just bouncing around that 18-week average. Now, the 100-week is here. The market still has what? Downside momentum, hasn't begun to turn up. Should it break down, it might be going back to that 862 area. We haven't gone back into that channel we had last year to test the low end of that channel, period. Not at all since 2018 began. Is this going to be the shot? My guess is if a trade war were settled, the market would just be euphoric, and that could be the catalyst there. In the 10-year notes, we keep hearing that the Fed wants to raise interest rates, but since June, the higher you go in this, actually what's happened is we're getting creeping of a drop one day and increase the next on the 10-year. Just sort of drifting sideways. Do you see all that sideways action? I'm going to repeat myself. That from there comes action, just like you did back here. That's where the trends come from. If the Fed's going to raise interest rates and keep it going and the economy were to get end of the trade war, I'd be looking at the downside. Trade wars keep continuing? No. Then I'm looking for the market maybe to surprise people and go up a little bit, which means yield's not really advancing much. The curve yield, the 2 and the 10, is what you got to watch. It's at around 0.25, 0.27. If it inverts, a lot of people think that that could be a sign that maybe 6 months later or so you're in a recession. I don't know. We'll find out. Everybody's got a reason why this time it's different. Who the heck knows? In the TLT, which is the popular interest rate ETF, higher lows, higher highs. Yes, this narrow band. A lot of resistance at 123.80, but this market keeps climbing that wall of worry. And if you believe that you're going to get all these interest rate hikes, these markets should be dropping, not going up. They're going the opposite way. In the dollar index, on the weekly chart, you held up nicely. You've still got the pattern of higher lows, higher highs. Not on the daily chart, by the way. That pattern disappeared. The next resistance level is right here, 95.40, the 100-week moving average of closes. Now, there's something else. I want you to look at last week's range, 94.88.5 to 93.57. We took out the low and the high. So we have an outside week up. Bull markets, when they have an outside week up, should not see the low of an outside week taken out, in my opinion, in the next week or week after that. If it does, I call it a bull trap. And price often then heads back to the closest moving average. In this case, because the 100 days up here, it would be the popular one, the 18, and that's what I'd be targeting, if that happens. It's another way of also saying the bulls have to defend that price, and momentum is still in the upside. In the euro currency, not the same pattern. You have a pattern of lower highs. Now, if we come back right here and we take a look at this low, that was 115.66, and that was for the week of June 22nd. We then come back over here and we have a low of 115.26, right? So what we have is higher lows and lower highs. So as much as it looks like it's in a downtrend, it's sort of in a drifting pattern more than anything else. And until you get through that number, that 115.66, got to be a bit cautious right here if the market it can go down and go anywhere. Should it go down, the 100-day average comes in at 114.74. Should the market take out 118.58, you could all of a sudden end up with a pattern of higher lows, higher highs, and that would put the 119.91 number into play. In the Aussie dollar, many consider this a proxy for China. What happens in China, because so much of their business is done with them, traders look at this currency as a proxy currency. It is not trending. It certainly has a downside bias. It had a bearish crossover right back here. If you take a look, there it was the week. And from that, you should have had new lows if you believe in the theories that bearish crossovers lead to that. And you've had it. And the market has paid attention to the lower Bollinger Band and bounced away from it. However, momentum is still down. The bias is down. In the Canadian dollar, strong resistance just above current pricing. You run into it at 77.13 to 77.30. That's where I would think the bears want to make their stand in this market. I think they'd be wrong if you get over 78.52, and if they're right, the market might be headed to the lower Bollinger Band. In the Japanese yen, I get the impression on this chart that it's broken out to the downside. And what it's doing is it's starting to hit the lower Bollinger Band, not bounce away from it. Momentum's locked in. The trend is down. This chart looks bearish. I'd be wrong in my thinking if the market got over 91.98. What about downside? Markets that do what this pattern is often just ride that lower Bollinger Band. Let's see this week how things look next week. Bitcoin, the weekly chart, still looking bearish to me. Lower highs, lower lows. I'm still perplexed. What is the use of a Bitcoin other than speculation? Just haven't been able to get away from that. I understand blockchain. Bitcoin is a currency. Blockchain is ledger keeping, if you want to make it the most simplest way of doing that. Momentum is locked in down. The trend is down. You'd have to get over 67.95 to at least negate the downtrend. That's about $600 higher. In the weekly area chart of closes of Brent versus WTI crude, the lowest we had just been was 312, and we got a bounce to 432. So you're getting some play back and forth. Is it a combination of, and it is a combination of Brent in one manner or the other starting to gain a little bit on our WTI. And remember, in the Brent, look at how this chart turned down. This is a big break this week. Anybody that thinks crude oil didn't get hurt this week, down 2.3% for the week, lower highs, lower lows. I want you to look at the 18-day average of closes, the red number, 74.24. You went through it, managed to come back and close over it. Momentum was also lost to the upside. In the WTI, you have a pattern of a lower low and a higher high. Now, there's a question as to when the syn crude out of Canada, that big unit that went down, we lost about 300,000 barrels a day, will come on. When it does, the question is, will it impact WTI crude in a negative manner? You did make it up, and I think you realize that, to the on the week of June 29th to the upper Bollinger Band. You even went higher the week after, and you're suddenly in a corrective mode. As you can see, down 3.78% this week. Momentum lost to the upside. Now I think the market's just sort of in a drift pattern. Keep your eye on gasoline. This is a time of the year where this market likes to weaken. You heard me, not strengthen, weaken. And we were talking, did it get a rally for the July 4th holiday, and was that about it? And that's the question. Right now you've got lower highs, lower lows, but you did close over the 18-day average, so you kept the market from confirming a downtrend. Momentum is still pointing down. And in the nat gas, you've gone from this sideways action into churning. In other words, you were trying to climb up all this time. You hit that Bollinger Band back here and the 100-day average of closes. Couldn't go anywhere, broke through a previous low, so now you got a higher high, lower low. You seem to just be waving in here, but if momentum picks up to the downside, and that's because you closed under the 18-day average, the 258 level could be the next stopping spot. You know, when we talk all these trade wars, the current issue of Modern Trader is something you want to read. It came out late this month, so if you didn't get it, don't be surprised. I don't know what their publication problems were, but it came out very, very late. The July issue isn't out yet. This is still the current issue. And it's chock full of information on trading ideas and help in understanding where this trade war might carry the market one way or the other. This publication runs $79 a year. It's free through us. You get, by email, a magazine each month, and you will get their daily market focus, which are current stories that impact the markets day by day. I know a lot of the writers in this and good friends with all these people. You certainly want to understand some of these stock patterns. And of course, how do you trade war? Very important. Very, very important. So to get it, just give us a call, 866-973-2077. Let me make sure I got that, 2077. And on our website, www.iraepstein.com. You can also click up here and it'll take you right to the form to sign up. I'm Ira. You have a great weekend. I'll see you all Monday.